Hello, hello, hello. Welcome, everybody. People are starting to arrive. This is great. Welcome to the second episode of All Street Beat, hosted by Commonwealth. Great to see everyone here. I've got my colleague Connor. He's co-hosting here, and he's going to help us just with the administration, so helping up the panelists and managing the questions. So just so you know who Connor is, he's working with Commonwealth. Great to see a lot of familiar faces here and plenty of new faces so far, and a warm welcome to all the panelists who are joining us as well. We've got some great speakers today, and hopefully we've got a really interesting, exciting show for you to listen to and participate in. And indeed, it's not the warmest of crypto summers out there. In fact, it's pretty damn cold if you think about the markets. However, if anybody's in London right now, it's anything but cold. I'm here visiting, and yeah, everyone says the weather in the UK is terrible, but I've been sweating profusely for like 3 days straight, so I don't know what's going on over here. But yeah, the markets are cold. They're not warm. They're pretty damn terrible for everyone. So I'm hoping we can warm each other up here in the All Street Beat and have a bit of a discussion around the future. And forget a little bit about what's happening in the crypto markets. Just waiting for a few more people to join the panel, and we'll get started. So again, welcome everybody who's joining us to the All Street Beat. This is episode 2. We're going to be diving into early stage retail investing. We are going to be understanding the barriers and exploring solutions around investing, but with a mindset of everybody investing, not just the sort of traditional accredited investors or institutions, but what it means for everyone to invest, and what are the pitfalls with that kind of approach. What are the barriers, specific barriers, and then also what are the solutions we can bring to help transcend some of these barriers so that everybody can enjoy some of the upside that has been reserved for the institutions and the privileged networks and accredited investors up until now. So welcome everybody. This is All Street Beat episode 2. And we're looking at early stage retail investing, understanding the barriers and exploring solutions today. We've got a really great panel ahead of us. I see already about 4 or 5 of the panels already joined. So in just like 30 seconds or so, we'll get started. If you're here and you would like to, especially the panelists, if you want to, speak to any of your community, just drop a message in your Twitter or whatever. Just tell them you're on the All Street Beat. If anybody wants to drop in, I don't know if you have Discord servers, up to you. But if we want to have a nice big audience today, feel free to welcome anybody in from your communities. Either send them a tweet that you're live on the All Street Beat or into your Discord servers. Yeah, we're also going to pin a tweet on the spaces, and you can just comment on that tweet as well if it's easier. Thanks for that, everybody. So we'll get started in about 30 seconds for the second episode of All Street Beat. Welcome, everybody. Okay, it's 5 past the hour, and I think it's a good time to get started. Welcome, everybody, to the All Street Beat. This is the second episode of the All Street Beat series, and we are exploring early stage retail investing for all. And that's it's a very deliberate title. It's not retail investing for a few people. And in fact, retail investing implies that it's across the board. It's for anybody who feels that they would like to engage in the crypto market or investing into early stage crypto projects, but otherwise hasn't known how to, or if they knew how to, were not able to because of the barriers that are there. So this really is a discussion around that it applies to everybody, in fact. And I hope if you're here that you are either curious about that, about how to invest into crypto, early stage crypto projects, or in fact you are, somewhat of an expert or already part of the network, the sort of, yeah, you have the access and that you are interested in seeing, an improvement in the access to investment opportunities to extend beyond just the select few, just the accredited investors or institutions that are part of a certain network. And you're interested in leveraging technology that is at our fingertips, that is in our hands to make that a lot more accessible and a lot more even in terms of access to these opportunities that venture capitalists and angel investors have been benefiting from for decades. I'm Tim. My name's Tim McCann. I'm involved with I'm a key contributor to Commonwealth. Commonwealth is an early stage investment platform. We are leveling the playing fields for access to early stage crypto projects, seed stage, private stage, venture deals. We are providing those through technology towards the full retail, community, and giving them the same access, giving them the same opportunity to co-invest into early stage venture deals that have otherwise been the privilege of institutions and accredited investors. So that's Commonwealth. We have been designing that for well over 15 months now, and it's about 80%, 88% designed and built. And we have just completed our second fundraising from the community, which was done via Series 1 and Series 2 Genesis NFTs. If you don't know about those, then you're welcome to go and read about them on OpenSea. Please use the official links. There are scam series and collections out there, so use the official links from our link tree. You'll find the link tree in our Twitter bio. Very important that you access the right collection there. We don't want anybody getting scammed. And yeah, Commonwealth is a project that has been around for about 14 months. It's been started by a venture firm called MetaVest Capital, and together with another venture firm called Master Ventures. And we joined forces because we believed that the current landscape for retail investment was unfair, and that we also believed that we had the technology available to change that. So we've designed, and we are in the process of building Commonwealth together with with great individuals in the executive team and also on our advisory board. And we've got great people behind us as well. People like Miles Deutscher, Altcoin Buzz, Crypto Mason. We've got a lot of people who are pinning their colors to the Commonwealth badge because they are people that believe in giving access and equal opportunities for everybody to invest into early stage venture deals. And we've built a decentralized and fully democratized platform, Web3 protocol, which enables that investment process to take place in a seamless, easy to use, and completely permissionless fashion. So this is Commonwealth, and Commonwealth is hosting the All Street Beat. And what we want to do with the All Street Beat is bring in people with very specific views on retail investment, on VC investment, on early stage investment, angel investing, or Web3 specifically. And we want them to discuss, together, what are the pitfalls with involving, the full spectrum of retail investors into early stage crypto deals? What are the advantages? What are the opportunities? How can we leverage technology? How can we do these things that we've been doing for decades and do them better, and do them fairer, and do them safely? We all know there's a lot of FUD out there when it comes to Web3 and crypto, and especially getting worse with the intervention from the SEC and the US government, really penalizing people for trying to leverage technology for a better use case, a better purpose, and a better value for more people than less people. And that's really what Commonwealth is about. The clue's in the name. It's about the commonality. It's about giving the same kind of wealth opportunities to everybody, to the 99%. So That's enough from me. I'm really excited to introduce this panel we have with us today and to get their views. So what we'll do is I'll invite you guys to speak one by one, and then you can, tell us a little bit about who you are, why this is interesting, what this topic means to you, and then also specifically if you can just answer the question on what do you see as the primary challenges and obstacles whenever it comes to retail engaging in the type of, sort of angel investing or venture investing that has otherwise been done by other institutions? What are the pitfalls? What are the challenges that are there when we invite retail into this arena? And I'll start by asking Statter Labs if you can introduce yourselves, and then after that, Bridge Mutual, and then after that, Michael Lamoth. So in that order, if you guys could just unmute yourselves, introduce yourselves, and then tell us what the pitfalls are in your eyes for inviting the retail community into early stage crypto venture investment. Go ahead. Over to you, Statter Labs.
Hey guys, how are you? My name is Antonio. I'm the head of ecosystem and community at Stater Labs. And yeah, team, I really agree on what you say. I think it's very difficult today for retail investors to make appropriate decisions when it comes to investing projects. Many times the best deals are already snatched on private or on seed rounds. And I would also argue that what's like an additional layer of difficulty versus investing on other markets, like for instance stocks, right, like US stocks or whatever, is that you not only have to take into account like certain rules of valuation that you may apply, trying to project yourself into the future and see how a certain company could perform, or as if it was like investing on startups, right? But you have the additional layer of complexity that it's tokenomics, right? Because you can have a great project, maybe the fully diluted valuation makes sense. Maybe you run some numbers, it makes sense to you when you look at the total addressable market, etc. But if the tokenomics are not well designed, if it's designed in a way that it's going to be a cash grab by the insiders, right, and the team, it's certainly not going to be a good investment, right? And many times retail investors do not have that knowledge, and it really takes you like several months, or let's say a couple of years, navigating the market in both bull and bear to understand, and to start to see patterns and to start to recognize red flags easily and stay away from projects that might look legit on the surface but actually are not, right? Those are my 2 cents.
Yeah, really great. That's awesome. Thanks a lot. That was brilliant. Remind me your name again. Sorry, because I just see your Twitter profile, Statter Labs.
Antonio.
Antonio, thanks, Antonio. That was brilliant. So Antonio's, he's saying, okay, first of all, if you can get access, because most of the best deals are already snatched up, which I think we can all agree on. We know for a fact that, if something is hugely anticipated, hugely hyped, in the right forums, that no matter who you are, you're almost, it's almost impossible for you to get access to that opportunity, right? And that's, I think that's just true in life. But it doesn't necessarily need to be so exclusive in the sense that, the pond, as it were, for who might even get that opportunity is still very, very limited, very defined. So I'm not saying, everybody's going to get access to everything, because that's naive. But to be included in that arena, in that pond, to be part of that, I think is the first challenge and the first question. So, let's not get carried away, but also to understand that, just removing that simple barrier to be part of the conversation, to be included in the discussion, and to have a fair opportunity to say, like, listen, we believe we are a value add, and we believe we should get access to that type of venture opportunity. I think that's already the first challenge. The second one you said is bang on. I think everyone recognizes, this huge risk especially in Web3 with avoiding cash grabs and, identifying strong tokenomics. And, I think a lot of that will will be hopefully evolved, like you said, down the line. Whenever you look towards the future, you do hope the second and third iterations, the fourth iterations, the fifth iterations of any market cycle is going to produce stronger quality in terms of what's out there. So a part of it is natural progression, but of course a part of it is skill and experience and expertise in being able to understand and assess these things. So how do we bring those elements into the conversation? And if it is somebody who's new to those things, how do we provide the information that's necessary for those types of pitfalls to be avoided? I suppose that's one of the big questions. Nice one, thanks, Antonio. Bridge Mutual, please unmute yourself and introduce yourself. And yeah, what's your thoughts?
Hey, can you guys hear me? All good? Loud and clear?
Yeah, 5 on 5. Go ahead.
Perfect. Congratulations on the second space as well. So just a quick introduction about Bridge Mutual. We're a decentralized blockchain-based platform that aims to revolutionize the insurance space by providing coverage for smart contracts, crypto assets, and other digital assets. And as the head of marketing and partnerships at Bridge Mutual, I'm here to share my insights on how we can sort of collectively address the challenges and barriers faced by retail investors in early stage investing. And I think it comes down to what the previous speaker Antonio mentioned as well, in terms of accessibility of information and what that information actually means. So for instance, most people would fall into what their favorite spokesperson, in terms of maybe it's an influencer or someone who they trust in terms of their decision making process when it comes to investing in different projects or investing in different protocols, but they don't have the necessary financial literacy to understand what makes a tokenomics good compared to one that is average and unsustainable long term. So I think that is one barrier that which we firstly, accessibility is one thing, and what you tapped on about the most hype projects might not be available for everyone, regardless of your position in the market. But sustainability is not always there. In particular, the hype will not last forever. And for people, particularly retail investors who do not have this information, or they're looking to explore a new market, particularly if they're from regions from, maybe Southeast Asia, where their knowledge may not be as up to date as someone maybe in the US in terms of what Web3 is, how can they differentiate a good project from an average project, and what actually is a good entry price, and also being able to vet the team, most importantly, on how capable are they of executing the vision which they have proposed publicly, maybe as a part of a roadmap, and things like that. So I think in terms of early stage investors and how we can bridge that gap, I think you guys definitely do a great job in terms of providing the accessibility part. And I think one big focus of Bridge Mutual, and I think the rest of the industry, should be on educating more people so that they can make more longer term smart decisions within Web3 when it comes to their retail investing.
Yeah, nice one. Thanks a lot for that. Yeah, I mean, education is going to be a red thread, not just today, but throughout, the rest of the All Street Beat series. And I suppose that's a natural consequence of, introducing anybody to something that's new. You first got to provide the baseline understanding and the opportunity to, and an opportunity to dive deeper and deeper and deeper, I suppose. And that's one of the things about Web3, which is potentially the most interesting and the most exciting, is that you can really go deep into, I suppose, the rabbit hole when it comes to many of the different topics with regards to Web3. But the information is generally available. One of our colleagues, Alan Bejic, who is he's been around when it comes to business development for Google and for Facebook. If you've looked at any of our videos on the YouTube channel, one thing Alan says is, that he really, really likes about Commonwealth and sort of, taking Web3 to this level is, with the first iteration of the internet, you had information that was being provided, generally speaking. The second iteration of the internet, what you had was people socializing around that information. And with the third generation of the internet, now we're going to use it. We're going to use that information. We're going to use that socializing, and we're going to leverage that to make it meaningful. And this is, I think, what's potentially the most exciting about this iteration of the internet or of technology, and specifically about what Commonwealth is doing. It's trying to take information, provide it in a useful manner, make it socialized so that we are able to relate to each other with regards to this information. But thirdly, make it count, make it useful, make it mean something. So that's that's at least why Alan's excited, and also I think it's something for us to remember as we take this journey. It's not just about providing information. It's not just about talking together. You can go on our Telegram group and you can have great chats with people, but ultimately we want this to lead somewhere, right? And I suppose that on the individual level, that should mean that it benefits us. So yeah, let's hear from Michael Lamoth, and then after Michael, I'm going to ask the next speaker as well, who is going to be Antonio. So Michael and then Antonio, please unmute yourselves and say hi.
Hello, everyone. Can you hear me all right?
5 on 5, Michael. Go ahead.
Awesome. Thanks so much, Tim. Thanks for having me here. And also, I'd like to thank Kyle for the invitation. So I might be the person that you guys are speaking to, more of the coming from the retail world. I've been a retail stock trader for nearly 25 years. My journey was such where I started out part-time making all the mistakes that people commonly make. I started in 98, 99 and blew myself up. I made plenty of mistakes along the way, eventually found a way to trade and to trade well, did that for many years part-time, and about 5 years ago, transitioned to becoming full-time trader and coach and leaving the day job behind. Actually wrote a book recently called The Trading Mind Wheel, which gives retail investors a blueprint for how they can learn and become successful in the market. And it's more about the skill sets that are required. I actually think that many of the skill sets might apply here. And so that's why when you sent me the talking points and listening to what some of you have said, I actually have more questions than answers at this point. Some of the questions that I have are: how is research performed? How is the data collected? Where does this data come from? When we're talking about stocks, I know where the data comes from. I know how price action moves. I know about liquidity. How do those things happen in this space? Is there liquidity, or am I expected to sit with an investment for a long period of time? Well, what's my out? How much money is necessary to get involved? Well, we all know about Robinhood and that you could buy fractions of shares and open an account for zero. That comes with its own wealth of problems too, because people tend to think that because it's so easy to access that, well, it must be easy, right? You don't allow surgeons or people to walk off the street and begin performing surgery. So if you're allowed to just access this market, maybe it's easy. How do we set the right mindset for people that are coming in and accessing this? I think that Stater made a great point earlier. How do you know if something is a pump? Bridge made a similar concern or question. How do you vet the team? I'd love to hear some of these questions, and it sounds like you guys at Commonwealth are aiming to provide some of those answers. So it's very exciting, and again, I appreciate being a part of this conversation and look forward to perhaps getting involved in some of this myself if it's the right thing.
Cool, Michael. That's awesome. Thanks a lot, man. I'm interested about your book, so feel free to, make a comment in one of our, on the tweet that's pinned actually, and just with the book details, we can, everyone can have a look at that. You've asked a lot of questions, man, and I'm not going to try to answer them all, especially not right here. We're doing a series, and I think as we evolve over the course of the next 7 to 8 weeks, things will become a little bit clearer. Commonwealth itself as a platform isn't aiming to be the the magic silver bullet for everything. And I think we have to, be careful not to set expectations at the wrong level because, that's just, naive at the extreme. But what I can say is a lot of these things that you are bringing up have been tackled and have been thought about. And there's very specific pieces of Commonwealth. We will. We can dive into, but it's not necessarily for us to do that right now. I mean, it's more really a panel discussion and a debate. What I might do is, if any of my team is listening towards the end of the session, we maybe can just take a few of those questions vertically and just ask for some feedback on how the platform might tackle some of these questions. But yeah, great questions, Michael. I've logged them as well. So thanks for that.
Sure. Thank you.
So Antonio, please welcome, unmute yourself, tell us a little bit about who you are and also what your thoughts are so far.
Hey man, it's just me. He's the head of community at Stated Labs. I was just requesting that as a backup handle.
Oh, you've got yourself on twice. I get it. Okay. Thanks, man. I thought maybe we had two Antonios. Okay, then over to Luke. If you're there, just unmute yourself and yeah, just say hi. And maybe if you don't mind, you can also tackle some of the questions that have come up. If you have any answers to those or any ideas around, what is a good way to educate retail investors in this environment that we're talking about? If you have a view on that.
Sure. Hi, everyone. Hope you can all hear me well. Thank you for inviting me onto this space. It's interesting to hear that you're in London as well, Tim. I'm based in London, so I think I'm the first one here that's from this side of the pond. So it's great to be here with you guys. So a little bit about myself. First of all, I primarily am a trader. I trade crypto basically, on a day-to-day basis. But as with, I think, anyone that's in this space, really, I got into it as a retail investor. So I thought this would be a really good topic to just maybe talk about some of the things that I've encountered since being in crypto. I got into cryptocurrency around about 2017, just during the previous bull run before the one that we've just had. So I've got a bit of experience on how these cycles work, how various projects just appear and go crazy, and then you go into another cycle and then into another cycle. So I thought this would be an interesting talk just to basically just to talk about some of my experiences on that. Also with what Michael was saying, I think, I could possibly answer some of the questions, at least from a retail perspective, like myself just being an individual and being interested in crypto and Web3 as it's called now a little bit more, of ways that I've managed to make some success out of what I've been doing. Again, I think similar to Michael there, being invested without really having any idea of what this whole space was about. I made mistakes. I bought into stuff when they were high. I ended up holding bags all the way to zero. I've done plenty of that, but I've managed to get to a point now where I feel comfortable enough in not only on the trading aspect, but also building an investment portfolio for certain market cycles as well. So, I think that's all I can think for a little introduction for now for myself. Yeah.
Very nice, Luke. Thanks for that. I mean, you have sort of kind of educated yourself in this industry. I know we're talking about venture capital or sort of early stage venture deals, investing in those versus what you do, which I assume is a bit more sort of day trading or sort of high velocity trading. But is there anything that you can say that you think people should really look out for? What are the sort of the biggest pitfalls when it comes to kind of engaging in Web3 from an investment perspective? And do you have any ideas about how to mitigate those?
Yeah, I think as when you're thinking about retail, and myself, like, not being from venture capital, so this is why it's really interesting for me also with the questions Michael had about how you guys are finding projects very early on, before they really hit the market, before retail really find out about them, before they hit exchanges. I've always been someone that has, I would consider still investing early, but for me, that is when tokens start to hit an exchange, or maybe a little bit of DeFi stuff on things like Uniswap and such like that. But I think really one of the main things, points for myself, is just how the market, especially within Web3, within crypto, I think it is very much geared towards many retail investors being magpies. Essentially, they're always constantly looking for the next thing, and it's that short attention span that people have a lot at the moment. So as we've seen recently, we've had a big meme coin cycle that's gone on. A lot of people will currently be holding tokens from that cycle that they may have bought somewhere near the top, unaware that within the space of around, well, sometimes less than a day, these things can crash 60, 70, 80, 90%, and they'll never get back to where they were before. So it's I think a lot of people who are investing what they think is early, but realistically being after venture capital have got in, once they've got their money and got out of the project, even though it's early into hitting exchanges and stuff, often that is late for the actual cycle itself, and then the market moves on to the next thing, which was whatever narrative comes after that. So I think that's something that retail in particular have to be really cautious on, is buying into hype. By the time you actually know about a lot of this stuff and you see it on Twitter and you see it all over TikTok, etc., and it is on exchanges and it is accessible, it's often too late at that stage, especially when you're talking about new projects.
Yeah, 100%. Thanks for that, Luke. So I think what you're pointing out is something quite fundamental, really, is that if you look at the graph of an investment from its seed stage valuation right through till maybe when it peaks on the open market after it's listed on exchanges, how has the value sort of appreciated in that period, and when has the sort of the steepest inflation or kind of increase in that value happened. There's actually we've got a great blog on this. I don't know if you guys are into reading. Anybody here? Again, in our link tree, if you go to our Medium, the first blog that we did, which was all about access. There's even some graphs in there which bust the myths over when it comes to when is the riskiest stage to invest into a crypto project, and you can see actually exactly what you said now, Luke, which is generally speaking, this myth that was busted indicates that it's riskier to come in at a point when it's trading on the open market than it is early stage. The risk is actually sometimes or quite often less, because of exactly what you say: buy the hype, sell the news. That's what that's kind of how the saying goes, doesn't it? So one of the fundamental kind of issues is timing. When is access given, and who has that access? So I suppose what one thing we're trying to do there is make that even, or make it more even, in the sense where a retail investor should have the same access point in timing, or if not the same, a lot better. So before it becomes known on Twitter, before it's listed on exchanges, those are the times which are really, really interesting, especially for good projects. So yeah, I'm resonating with what you're saying there. So thanks for that. Cool. OX Alpha. I don't know if you have a name, but great to have you here. And please introduce yourself.
Oh, hi. Thank you. Actually, OX Alpha is my name. Well, just like Satoshi Nakamoto.
Oh, really? Is that what your parents gave you at birth? No, I'm not joking.
Okay, just kidding. Okay, yeah. So this is a 0x Alpha from Dara Protocol. So Dara Protocol is a DeFi derivative protocol deployed on Arbitron, zk Sync, and BNB chain. And we're especially interested in this topic because I think this is kind of like a common purpose that we are working on. So right now we are providing derivatives in the DeFi way, which is one of the most important points here is to bring down the barrier in traditional finance, where the barriers that we are bringing down is in the sector of derivatives, which was a very exclusive sector to retail investors also. So, but today here, of course we're talking about early stage retail investing, which I think one thing I want to point out here is this is a relatively new topic because there was just no such a thing as early stage retail investing in traditional finance. So the sector that Deripug is working on, derivatives, there were still some activities going on on the retail side, right? But for early stage investing, when it comes to retail stage investing, I think there was just no such a thing. For example, Michael just mentioned you've been long time a retail stock trader, but I bet you just cannot get your hands on a stock or a company until it goes IPO, right? So, but I think you not call like post IPO trading as an early stage investing. The fact is, early stage investing is one of the monopolies in the traditional finance, and so that has been long time a closed door club of those famous VCs and venture capitals. And to participate in venture capitals, you have to be the so-called accredited investors, aka rich people, right? So I think those are just a bunch of financial, I give it a name, financial aristocrats. And I think DeFi or this whole crypto movement is about bringing down all the barriers in the traditional finance. So that's why, yeah. So that's why I think today this topic is very, very interesting to me. But first, I guess the first thing we need to realize that this is a new thing. This is not something that has been there for a while. It's only, I guess, the crypto world is the only place where we talk about this topic because this is the only place this is possible. And yeah, so that's, I guess that's the first thing we need to realize. And today we're talking about all kinds of difficulties. We're talking about all kinds of obstacles. We're talking about but all of these things that we're talking about is only the first thing there is that okay, this is now being made possible thanks to crypto, thanks to DeFi, and but then I guess all the retails, all the retail investors come to this era, this relatively new era. Then well, we just need to bear in mind of a lot of things that this is probably something that's just some of them are, I guess these are the common sense to those investors that have been working on the early stage for a while, those people who work in the venture capitals, right? But this is I guess the first several lessons that people need to learn in this sector is just maybe first adopt those common experience or common sense from those venture capitals, which are actually, I guess, just are not so complicated. For example, this is not a place that you can adopt a all-in strategy, right? So but I think there are some things that are kind of specific or special in this sector. For example, this is a sector that you especially need to avoid scams, right? Because the crypto world is full of scams. Well, I'm not saying the traditional finance, there's no scams in traditional finance. There are still a lot, but I guess scams are a more common thing in the crypto world. So this is and when it comes to the quoted opportunities faced by the retail investor, it's even more common to see scams. So I guess people especially need to learn the skills to avoid scams. And among all of these things, I guess based on my experience, the easiest way for retail investor to invest into something, invest into a good investment opportunity is to become the so-called user and investor. So if you are interacting with something, not for the sake of investing, but for the sake of like your own organic demands. For example, you're a user of some DEX, you're a user of some lending crypto, or you're a collector of some PFPs, then you naturally understand those opportunities, right? So yeah, so so that's what I guess that's the major point I'm trying to make. This is something very new, and everybody is still learning how to do this as a retail investor. But there are some things that we can learn from the traditional practitioner in the early stage business.
Yeah, no, it's great. It's a great intervention. Thanks very much for that, OX Alpha. I really resonate with what you're saying. Is like let's keep our heads, well and truly on our shoulders. We need to look here and recognize that this is something very, very new, very nascent, and it's going to take time for it to mature in a way where we feel confident and feel strong about what it is we do and what's being offered, right? Especially when it comes to retail investors. And yeah, absolutely, I agree completely that it would be also naive and even reckless to ignore the lessons of, traditional and more experienced institutions and markets and just the general kind of learnings that we take with us from Web 2. I think that has to be part of this. It's not a rejection of everything that's come before, right? It's just using technology to evolve and become better. So whenever we talk about doing due diligence, it's not that let's say the criterias or the frameworks that are developed for due diligence are going to be thrown out the window, but rather take those and figure out how to apply those in this new context, in this new environment. And I think that's something that's extremely exciting in terms of how that might look and feel. And just something at scale, how that looks when you have thousands and maybe even tens of thousands of eyeballs on something versus when you have 3 to 4 sets of eyeballs on something. I tell you which one I'm going to choose in terms of who might have picked up a flag that was otherwise not going to be picked up. It's going to be the tens of thousands of eyeballs. And I think that we can contest that, we can argue that, but if we do this right and if we use the tools at our disposal, and we are patient with how we do it, I do believe there's huge opportunity to improve on how due diligence has been done previously by sort of let's say venture capitalists in a more traditional sense. I love this example where I live in Sweden normally, and I don't know if you guys have this where you are, but sometimes you might get this random phone call on your phone, and it comes up. I don't know how it does, but it comes up on my phone where it says 98 people or 988 people have reported this phone number as spam, and then I don't even answer the phone. I just like click it off. And I love that in terms of it's not official. Like there's no certified kind of conclusion that this is a spam, but I am guided by the many experience on this. And it's also like any type of sort of open source review system, Trustpilot or whatever. I find that very, very powerful in terms of deciding whether or not something is positive or negative or good, or kind of it puts a value judgment on something. So I do believe that we are going in the direction where things can be developed in a very positive way to help sort of mitigate and minimize the risks that we experience when it comes to investing in early stages, which are many. And there's a red thread here already, like avoiding scams. So yeah, let's take that forward. Who else have we got here? Nath Cohen.
Yeah.
I'll invite you up. How are you, sir? Welcome and introduce yourself and tell us what you're thinking.
Yeah, nice to meet you, Tim. Nice to meet you, everyone. So as a quick introduction, my name is Nathaniel Cohen. So I am co-founder and chief investment officer at Indigo Fund. We are basically a liquid token trading fund investing in all the layers of the blockchain ecosystem. And I will define ourselves as an alpha-driven rolling opportunities fund, where we keep identifying new opportunities in order to bring yield to our investor. So to answer the question about the barrier first, I'm agreeing with everything that has been said before, but I would just like to add that even if by chance you've heard about the project way before it start to be known, most of good projects, they are not looking for a sleeping investor, but actually active investor that can help them in pushing the project forward and realizing their goals. So as a retail investor, I think that it's another barrier that make it hard to access if you're not already in the ecosystem or have the right contact or have the right way to push the project. And even if you do, which project will let you put $2,000 or $3,000 in their safe? So the minimum ticket is high, and retail users have usually limited portfolio that they can deploy on crypto blockchain ecosystem. So they're also limited in terms of the maximum money that they can put. And I do think that the solution you provide is actually interesting, as you use blockchain technology in order to pool investment and basically fractionalizing a SAFT or a safe contract. And so this is exactly how I started investing myself as an angel investor. So I joined a crypto community, French crypto community, where we share deal flow. And at some point, we decided just to create a small structure where we could pool our money. We were 5 people, and contacting some project and tell them about us, how we could help them pushing for it.
Nice. That was really great. I think you've got a lot to offer to the discussion, Nath. So yeah, really interesting to hear your experience. So when you say that this is how you started, with your, I suppose, investment DAO or whatever you want to call it, what was your experience, and how did you avoid some of the pitfalls when it comes to choosing wrong deals, or not wrong deals, I suppose, but avoiding the scams at least, because you can always back something which is a legitimate project but just doesn't work. Okay, that's fine. Everyone understands that, but I suppose at the very basic level, we want to avoid actively promoting scams, so or funding scams, I suppose. So how did you navigate that?
Sure. So I think that the first question would be to think, would you use the project yourself? For example, there is a new NFT collection that is getting released, and it's just about PFP profile. Do you really want to invest in pre-sale? And what do you think it will bring to you or to your investment? There are two types of investment. Either you can play the pump and dump and the Ponzi, trying to be early and getting out early as well. But there is also the second part where you are really investing in a project and really thinking about how it could be interesting to you. On my side, when I'm analyzing a project, so the first metric that I will see will be about the utility of the project himself, what they are trying to solve. Then I will look into the team. I always prefer to invest in a team that is fully docs, so I can know a bit about their background, what they did before, if the project that they have started before were successful. And finally, the last point that I would like to mention would be on the backers of the project. You are a retail investor. You don't have really a team that is analyzing the project that you want to get in and everything. So if you already know that in a seed round there are big actors such as, a Binance, Coinbase, or a big fund such as Andreessen Horowitz that have already committed to invest in the project, then it gives a bit more reassurance.
Brilliant. Yeah. Thanks, Nate. That's I think you've given some great tips there, especially for anybody here who hasn't, sort of dipped their toes into, kind of investing into early stages of projects. The two things that Nate brought to our attention is, would you use this product or service yourself? And I think I resonate strongly with that, because there's a lot of projects that have been funded in Web3, which ultimately I don't think there's any use case behind them, and more we have to look for utility if Web3 investments are going to be successful long term, because otherwise, there's not going to be a revenue model or a monetization model or something that's going to ultimately, you need traction, you need users, and you need ultimately you need income to be sustainable. So that's a really great one. Thanks for that. And also just, a simple rule of thumb. Who else is backing this project? Who else is on the cap table? Obviously, that is a huge cover for anybody who's a smaller investor. Is look to follow success. Success normally leaves a trail, and if you are going to back people, please back the people that have been shown to be able to do this before. And that's, I suppose, one of the interesting components of the Commonwealth model, the way it's been designed, is that we will have a council more or less of 20 people, and those 20 people should be recognizable for their track records in either through institutions, VC funds that they've been managing or making investment decisions in, or if they're angel investors who have been successful in investing in Silicon Valley or in Web3. These are the sorts of people that will be on the Commonwealth Council. And over time, that council will become even stronger and stronger, because Commonwealth will become more and more of a well-known entity infrastructure, and the council members will want to be on that council. To start with, it's likely, because we have 12,000 people on Twitter, that we're not going to have let's say A16Z, for example, may not want to be on the Commonwealth Council right now, because they think, okay, you guys are still developing, still growing, but further down the line, why not? Why would they not want to be on the Council for Commonwealth? And why would they not want to have a Commonwealth fund or product on the Commonwealth platform, through which they can also profile some of their investment portfolio companies or funds? It does make a lot of sense. So those council members are the people that are not going to take the decisions. It's very important. The decisions will be taken by those people who are investing into the funds, but they will be the ones responsible for surfacing the deal flow opportunities and passing on the information that they have at their disposal about that deal. And that will all be done on the protocol, or on the made available through the application layer. So really important role for the council in a lot of what we talked about today so far, which is how do we provide that information? How do we provide that education? How do we mitigate the risks? Are we utilizing the experience from the traditional system? And the answer is yes. And I hope that as we develop Commonwealth and other platforms like this, we do take advantage of the wisdom that is available in Web3 and around Web3. I think it's hugely important. We've got a couple more speakers I'd like to introduce, and then also anybody else who wants to come back and speak as well, who's on the panel. But first of all, let me invite Default Trades in, and then after Default Trades, Real Day Trading. Just introduce yourselves, and maybe specifically if you can give us some thoughts over how do we improve financial literacy, and what sort of resources do people need in order to be able to become educated in this space?
Hey, what's up, guys? Default. Been in crypto since like 2011, so quite a long time, back before exchanges and all that good stuff, when you had to navigate IRC on Freenode, and you had to buy Bitcoin with, green dot cards and all that good stuff. So it's come a long way. It's been a really interesting journey, not only for myself, but to like observe as new people come into the markets and how they're really just not prepared for the storm that awaits them, as I should say. I've seen all the cycles, so some of these people haven't seen any cycles. So, they see memes, and it's like a golden era for fraud. So they see these people making these crazy gains, and they're buying into these illiquid tokens that they have no idea, what the Solidity contracts do or even what a Solidity contract is. So there's a lot of education. Like I'm very bullish on the education sector. I think it's very understaffed, and just it's not an appealing thing to go out and teach. It's not easy work because everyone's at different levels of competency or how quickly they can pick up different types of knowledge. But it's no simple task. I will tell you that. And anyone who says that they know everything is lying or delusional, because even with 12 years of experience in crypto, I still learn stuff every day, so that's one of the great things about it, is it's a cyclical, like, everybody coming together and teaching each other. And that's what we really need a lot more of. But it's also become sort of like polymorphic as more retail has joined in its scale, and also institutions and countries. It's no longer this small little niche thing. It's everybody and their grandmother literally knows about crypto to a certain extent. I trade full time. I'm a CEO of Apollo Algo. I developed this first for myself and then to help other retail investors, traders, day traders. It's primarily technical analysis based. Everybody has their own flavor. And then getting into the AI powered algorithmic automated trading bot sector. It's a really exciting time. I'm a big nerd, so I love all the new tech coming out. Don't fade AI. There's a lot of use cases, but as far as investing, there's a lot of education, and specifically, do your own research. Everyone says that it's such a cliche term, but it is true. But a lot of people don't know where to start. Okay, so like, I do trade meme coins, but like, I wouldn't advise that for anyone just getting into the market. You have to have reasonable expectations, and usually people, when they get into crypto, they have these wild expectations because they saw a TikTok or a YouTube video. They think they're going to be like, oh, I bought some crypto 2 days later, why am I not a millionaire? No, it's not really how it works. Okay, like, it's the most alpha is where the trade is the least crowded. Okay, so like Bitcoin, Ethereum, you have to learn about market caps, if they can mint more, if there's VC lockout periods. There's a lot of nuances that you could get into learning, but you need to know your capital allocation. You never want to invest all in on anything, whether it's crypto, stocks, forex, commodities, whatever it is. But you also don't want to over diversify, because that can hurt you as well. You definitely have to learn risk management. That's honestly the key to being profitable. That is like the one thing that you have control over. You do not have control over how the markets flow. You can do TA and have a slight edge on where you think it might go, but the only thing you have control over is how you manage your risk and how you allocate your capital, and what are your time horizons, and what are your expectations. These are all like key factors that I try to teach people. And it's it's also a psychological thing, because to become like a good trader, in my opinion, you need to do like a psychological analysis of yourself. And that's how I realized the type of trader I was, and then went forward from there. But also, one of the things, or two of the things, that really helped me navigate this space and get in early when everyone was telling me I was insane was really having foresight. And it helps a lot if you're kind of like a nerd and into like tech and stuff like that. I didn't need anybody to have confirmation for me that like Bitcoin was an innovative technology. I didn't need anyone. I didn't care what anyone said, because I was able to see that this is innovative technology and you cannot stop innovation. You can stifle it, but you can't stop it. So things tend to trend towards innovation, different time frames, however long, whatever, but spotting trends and then having foresight, like for instance, a lot of people are speculating what are the next themes for the next bull run. If you look at DeFi's gotten a lot of bad rep for some good reasons, but that doesn't mean you should fully discount it. I'm still very bullish on DeFi. I think that will be the norm. I do think that centralized exchanges are a dinosaur. If it's the old saying, if it's not your keys, it is literally not your crypto. Like if you have crypto in a centralized exchange, most of the time you actually don't even have crypto on that exchange. You have an IOU, which is potentially redeemable at some point in time if they are liquid enough and they would like to be generous enough to give you the crypto. But when you have a hard wallet and you own the private keys, and I would kind of steer away, the whole ledger debacle lately is, hot topic. I would kind of like maybe not use them if you're really like a hardcore security, decentralized person like I am, because, that's kind of like what the whole name of the game is. This is not going anywhere. Crypto's not going anywhere. Don't listen to anyone who tells you that. Especially people like
Thanks, man.
especially people like Gary Gensler and all this stuff. They're saying this while at the same time they're making their CBDCs. They're
100%.
grifting us all. Don't fall for the grift, bro.
Yeah.
Like, I don't like to use the word hodl, but like, if you got in at a good entry, don't get fudded out. Like, as long as you're not over collateralized in how, like, you mortgage your house or whatever, just like, I've been holding on to some Bitcoin that I got at like $7, man. Like when I was mining, I don't really see any reason to sell. I don't need the money. So like, I personally believe it's going over 100,000 in the future. No idea when. Be 2 years, 3 years, 5 years. But DeFi is not going anywhere. And I think that will be, once the main crux of DeFi is the on and off ramp for fiat. And there's a reason that is the crux, and that is because the SEC shuts down pretty much anyone that tries to solve that problem. But also,
hey, Default. Sorry, we're getting slightly off topic, but it's. I mean, I could listen to you all day because this is my jam. But
interrupt me. I can literally just rant about crypto for like years.
But I don't want to lose the nuggets that you came out with, because there was some beauties in there. I think everybody coming together to teach each other, I think, is literally what I see the Commonwealth platform achieving through like a Web 2 style interface, like an app, but you can go in there and there will be that sort of socializing of all of the information that's available, but then you can use that for something. And I think this is where we're going with
more
the web.
Like that's I think that's the barrier that keeps most people out. The whole thing about Steve Jobs is he made the cell phone palatable for like your grandpa. We need to be able to do that, not just in terms of use case of platforms or whatever, but also of platforms for education. So people at any level, whether they're beginners, intermediate, experts, or have literally no knowledge of what crypto is, have somewhere they can go and easily learn about this and know how to navigate this space, because there's so many scammers out there. It is literally, I feel bad for a lot of people because they get sucked in and they're learning the incorrect things from people just because they have a lot of followers, and that doesn't mean anything. And some of the smartest people on here I know have like almost no followers. So you know.
Nice. I've got to cut you because there's like 3, 4 people who want to speak,
Yeah,
and
sure,
we're already 5 minutes over. But listen, I want to have you on again because I think you have a lot to share. And like I say, there was some proper nuggets in there. Do your own research. It's a cliche, but it's true. Where to start though, and how to do it. I think those are the problems we need to solve. So thanks for that. There's a couple of
appreciate
people
it.
that haven't spoken. I'm going to bring up K Dot in a second. I just want Michael from DTR Trading and Real Day Trading. I don't think you've been speaking yet either. So whoever's ready, and then K Dot, and then I'm going to give the final word to Tony Kelly after that as well. So yeah, please, or if anybody else has a burning intervention as well, just unmute yourself and just barge in as well. That's
Hey
fine.
there.
But go ahead, Real Day
Real day
Trading.
trading. Yeah.
Yeah, thanks, man.
I won't do much on the introduction. A lot of the people who are listening, I think, know who I am. And I'm not selling shit, so I don't, it doesn't really matter to me. But what did attract me to this panel was the idea of leveling the playing field, the idea of the democratization of early, basically, obviously, if you have a lot of money, you get opportunities that people who don't have a lot of money don't get, right? It's nothing new there. For example, I can get in early on an IPO. I can get a price on an IPO and get in early before anybody else can. Is that fair? Fuck no, that's not fair. There's nothing fair about that. But it what it does is it creates yet another level of barriers for retail. When we're talking retail, we're really talking non-institutional, right? And there's so many barriers there for someone who's in the retail space to become successful that I think it really is difficult to kind of quantify them all just here in one sitting. But I'll give an example. When I used to work in the film industry, for example, and the best scripts would go to the top studios, right? They would get it, and you don't need much talent to. I mean, there's talent, obviously, but you don't need much talent to go, oh yeah, Avengers, green light, done. But as the scripts get passed on, they get dropped down. So, it goes from, maybe Universal down to Lionsgate, down to a production company, and down so on. And by the time sort of independent producers get access to these scripts, they've been passed on by 5, 6, 7, basically everyone else in the industry. And at that point, you need specialized talent to be able to find that diamond in the rough, to be able to go, okay, this is something that everyone else said no to, but I see there's value here. Now, that is inversely related to the fact that retail investors are usually the ones with not only the least amount of access to resources and information that they need in order to decide, should I invest in something or not invest in something, or is this even a good investment? But they also have mindset issues that institutional investors do not possess, right? Institutional investors are guided by very clear guardrails of, this is what we're looking for, this is our business model, this is what we're doing. Retail investors are guided by their kind of inflated sense of how valuable their own common sense is. And they believe that, oh well, this looks good, this looks like it will do well, that's all I need to know to invest in it. And so there's your sort of your first barrier. One, they get the shit pick of what's left, right? Two, they're not equipped in terms of having the resources to identify that diamond in the rough, or the ability to go, okay, let me check my own ego here and stop for a second and think, all right, if what I'm saying is true, why did everybody else pass on this? There has to be something else. They don't go down to that second level of questioning. Then on top of that, there's another mindset issue, which is the same mindset issue that we have in the equity world, and that's where I come from, the equity world, which is the moment you get into any type of profit, you feel lucky and you close it, and you get out of your stake, your position. That's it. You feel like you hit a lottery. When the right move generally is to press that position, to stay in that position, to hold. And when the opposite is true and they are losing money, instead of cutting, what they typically do is have this false hope that it's going to turn around. So they have this messed up mindset that when they're finally right about something, that's when they should go, like, nope, I'm done. And when they're wrong about something, that's when they have the most faith, right? So you have all of these issues, these mindset issues, the fact that they don't have the pick of the crop, the all of these inequities that are built in. And a lot of it has to do with this general lack of education overall around the space. Because as long as people see whether it's equity or crypto or any of this as a gamble, that's what it's going to attract. It will attract gamblers. And until it is seen as a legitimate profession, as a legitimate area where if you spend the time, I tell people it takes minimum 2 years before you should even think about spending actual money as a trader, now not an investor, but as a trader into equities, because that's how long it takes to even have the beginning sense of becoming consistently profitable. But nobody wants to hear that, right? Because that's not who it attracts, and it doesn't attract people who think of this as a serious profession. So you have to sort of change the way the space in general, the investing space in general is seen, because if you're going to attract gamblers, they're going to come in with a gambling mindset. And no matter how much democratization you do, if you're attracting gamblers, that's what you're going to get, people who are there to gamble. So I think any effort that goes to addressing any of those type of concerns that I put in, because the fact of the matter is I get message after message, and I'm not being hyperbolic when I say I get hundreds of messages a month that of people who have lost everything. I mean, their house, their family, their marriage, because they followed some furu, they thought they knew better, and they just weren't prepared. And so I really do believe that this is a learned skill. There is a huge open door to financial freedom here, but the space itself needs to change.
Yeah, that's okay. Thanks for that. It's really powerful. I just your last statement really sort of captured it up. Huge open door to financial freedom, but the space needs to change. And I suppose when we say that, we're talking about the infrastructure, the culture, all of the maturity that needs to come with it. So, it's really great. Thanks for that. That's a super powerful and useful intervention. I hope, by the way, there's lots of people listening, and if not, can everybody in the panel, I think let's tweet the spaces out, because I think there's so much in here which can be hugely valuable to anybody who is curious about this topic. And we're talking about education. This piece in itself is educative. It has the potential to be an added value to somebody just by listening to this. There's been some great interventions and contributions from this panel. I've loved it. Thanks very much, guys. Okay, so this is the order we're going to go, and then we're going to end the spaces. But there's 3 more speakers, so we're going to go Michael, Connor, and K. Dot, and then Jin Kang. So Michael, you're first. Please unmute yourself and just at this stage, just tell us what you're thinking from all this and what you'd like to add to the discussion.
Yeah, thank you very much for having me on. So my name is Michael. I've been trading for a little bit over 10 years, spent most of my career working kind of on the institutional side. So kind of sat for a hedge fund and did trade execution for them for most of my career. And so I kind of look at this maybe a little bit different than a lot of other retail traders, a lot of other traders that maybe are on Twitter, where I think you don't understand or you don't see kind of the behind the scenes of how much is actually going on to support these investment decisions. So a lot of what I see from a retail perspective is very similar to what was just mentioned by the previous speaker, where there's not a very good plan, or there's not like a business model for how people want to make their sort of investment decisions. And so naturally, when you kind of go in trusting your gut, which hasn't been trained, which only has really confirmation bias kind of supporting it, then you're putting yourself in situations where you're sort of inevitably becoming a gambler. And so the way to kind of work around that, or what I think most traders or retail investors or people who are looking to kind of, invest in some of these potentially higher upside but higher risk scenarios, is need to have a more detailed plan on what failure looks like before it happens, right? What success looks like before it happens, and understanding how you're going to manage your position once you actually have that risk on. Because once you have a financial bias, once you have that financial burden of making that decision, then it's really hard to sort of trust yourself and think, hey, I'm going to do the mathematically correct decision, or I'm going to do the decision that gives me the highest probability of being successful. And so kind of identifying those variables before they happen is going to separate a lot of sort of those gamblers, right, from sort of those long-term investors. Now, on the flip side, this market dynamics, right, haven't really changed in the thousands of years that they've existed. So you're always going to have that selection of gamblers. You're always going to have those selection of kind of traders or investors who are kind of, working off of that business plan. And you have to decide which one you want to be. Where one, okay, maybe you hear the outlier of the gambler making it big and then not giving everything up. But generally what happens is you have that big win, you make that $1 million, and then 6 months later, you're back down to 10K because you didn't actually learn the habits that you needed to keep your money in the first place. So I would recommend to everyone that you need to think about your risk management from a first perspective, understanding that the way to longevity in this game is creating for yourself a margin for error and not attaching your ego to the outcome, at least not on a day-to-day basis. And the more you can focus on sort of the psychological element of your decision-making process, and then kind of quantify, okay, how can I improve that decision-making process, the more your investments are going to kind of pay you back in the long run. But if your objective when you're starting out is to only think about the money, to only make decisions based on a financial reward, then you're going to lose more money than you're willing to accept, and you're going to give up before you ever hit sort of your objective. So look, as much as all of our objective here is to become financially independent and to have that generational wealth and to make sure our kids never have to do anything again, if that's our only basis for learning and only basis for how we kind of treat our value in life, then we're probably not going to get very much value from what we do in our day-to-day. So don't make it about the money, make it about your decision-making process, make it about sort of the variables you can't control, and realize that as an investor, as a trader, you're not aiming to solve for 100%, you're aiming to solve for 70%. And if you can be correct on 70% of your decisions 70% of the time, then you're going to have yourself a really fantastic career and you're going to achieve everything you could have ever wanted. But if you try to hold out for a perfect hit rate, or you're going to be correct all the time, you're not going to get there. And when you do inevitably have that red day or that red investment or that red opportunity, it's going to put you into a mindset where you're making decisions that you no longer want to make, or make decisions that kind of give you that out of body experience. And that's when you create a lot of kind of lasting negative habits, and you go from, trading in control or investing in control to sort of being on the, pure gambler mindset. So the way you want to think about it is, how can I structure myself to be the casino, not the gambler? And if I can put myself into a decision where even if I'm making, 1 penny for every 50-50 kind of decision, I make 1 penny, but I don't lose anything if I'm wrong on a tails call, then, you're going to have a pretty good career, and you just got to execute that variance enough times to get the reward you want. But don't try to behave that, hey, this is my get out of jail free card. This is my lottery ticket to the better life. Understand that it takes time to stack up your wins.
Nice, man. Michael, that's brilliant. Thanks for that. I think you definitely can tell that this isn't your first rodeo when it comes to investing and trading. Don't make it about the money, make it about a process, make it systematic and not emotional. I mean, all those things. I think everybody listening, really, this is strong guidance, and just kind of preparing yourself mentally for all the kind of the hardships when the markets are doing what they do. And listen, a lot of the people on the panel today have talked about the pitfalls of retail engaging in trading, and I suppose the volatility of the crypto market makes that a very, very scary experience. And what we're talking about is, it's slightly different. There is a lot of parallels, of course, in terms of mindset, in terms of making a sound and solid process. But indeed, I think the early stage investment process would look a lot different from the active trading cycle or the active trading process, which day traders might be involved in. Yes, there's a lot of question marks over what does success look like and when to exit. I think, fortunately, through the Commonwealth design, that won't even come into question. There'll be sort of an automated process involved there. So it's really about making good choices at the start rather than the finish, and hopefully those will bring good rewards down the line. So yeah, I'm gonna go to the next person because I know we're pushed for time now. But thanks very much, Michael. That was amazing. Connor, if you're still with us, so Connor Bronson. I don't know if I pronounced that right.
Hey. No, you nailed it. I just want to say, first of all, like, great stuff from all of these speakers. You're hearing a lot of really wonderful advice on both strategies and mindset. And I think that point that Commonwealth and Michael are both just noting is really important to kind of talk about first, which is, don't obsess over learning technical analysis and learning day trading unless that's the trading approach you want to take, and it might not be right for you. You need to decide that base strategy that's going to be an actual fit for your lifestyle and how you want to approach this. For example, I'll say, like, I have recognized that I'm not a full-time trader. I lead marketing at developer tool startup linktr.ee. We've raised $71 million. I also co-host our podcast for engineering leaders. My focus is much more on like that early stage technology investments, understanding what's happening with developer tools. And so a lot of what I do is early stage angel investing and retail investments through crowdfunding and through crypto. And I've had to kind of realize the last couple of years that that's where my focus is, because most of my time is taken up by this startup and by the work we're doing. So I think everyone listening needs to ask themselves, have you thought about what your strategy is? Are you looking at a long-term time horizon? Are you a short-term trading person and you want to be making trades every day and you're spending your time on it? Because that's going to inform how you want to approach things. And I think a lot of folks, and myself included at times before in the past, have made the mistake of saying, oh, like, let me follow the advice of someone who has a very different trading strategy for me. Let me sit down and follow this incredible day trading account. And if you're not going to spend the time to learn the technical analysis, pay attention to what's happening, make sure you've actually set your stops on everything, you're not going to have the success that they're having. And so if you're going to try to take a more aggressive approach, you need to actually align your personal strategy and risk management approach with that. So Michael said this great line earlier, you want to be the casino, not the gambler, which I think was a fantastic statement. And it's really hard as an early stage retail investor to make that leap. A couple of different folks, great speakers, including Default and others, have kind of highlighted this. Yeah, that you're often limited on deal flow. I think day trading was talking about this. When you're a retail investor, you're not going to get that pre-IPO access necessarily. You're probably not going to get access to these early stage venture investments, those seed rounds, those A rounds, let alone BC. And if you want to be someone who is going to start getting access to that, you need to find your area of specialization and where you want to take that approach. So like for my example, since I'm in the startup space, I'm in the technology space, I've kind of gone in and said, okay, like I want to be an angel investing in other technology companies. It's where I'm going to start getting an informational advantage and have begun to the last couple of years. It's where I'm going to be getting an access advantage. But at least in the US, that is typically something that is blocked by accreditations, unless you're looking at like a WeFunder or other crowdfunding platforms. So as someone who doesn't personally think you should be all in on crypto, not that you shouldn't be involved in crypto, as I think all of us here are probably heavily, you should think really from the start about like, what's your investment mix going to look like and how does it react to your trading strategy? If you're looking at, let's say, a 10-year time horizon, how much real estate should you be mixing in? Should you be looking at buying an actual property? Is that going to be a better long-term goal for you as an investor because you want to be a landlord? Or is it a real estate investment trust where you don't have to actually do much of the work? You're just paying into a larger piece, but you don't necessarily get as much upside. So I would just encourage everyone here to think about like, how much time do you want to put in on a day-to-day basis around this? Do you have time to make this your full-time gig? Or is this something where, hey, like maybe I need to be taking a different strategy than some of these really successful day traders, crypto traders are taking, given how much volatility there is in this market? And others have said this already, but do your due diligence. When you're investing in these early stage ventures, when you are taking this on, there's a huge amount of risk involved. I'll say like plenty of us have lost a ton of money in this space. I lost $500,000 last year on Luna, because I didn't do my full due diligence in this situation. I got too excited. And it's really important that we all think about both how much risk we personally are willing to take on and how it fits into our strategy and our life. So I would encourage folks to think about this from a really holistic viewpoint and to consider the impact of each of these decisions on your overall strategy before you jump in and just start tossing money around, because then you are going to be the dumb money. You are going to be the gambler who ends up feeding everyone else's profits. So that's my bit. I really hope folks keep listening to the space. You're getting a lot of great advice out of it. And Commonwealth, thanks very much for having me on.
You're welcome, Connor. That was brilliant. Thanks, man. Sorry to hear about your experience on Luna. It's a great example, though, actually, if you think about it, because what we have there is, the brightest minds in the space and some of the biggest investors in the space all made the same mistake, and they didn't drill down into the finer details of what that protocol was doing, and they missed, the fundamentals. And I actually personally would love to have that opportunity round again and see if, for example, a massive group of investors on the Commonwealth platform, let's say it's like 5,000 people who all looked at that protocol, would somebody have flagged and said, like, guys, no, like this protocol doesn't make sense. It doesn't add up. What they're doing here is not sustainable. I'm not saying it would or it wouldn't, but what I'm pointing
I think
to
you
is,
got a great point. Yeah. So sorry, go ahead, come off.
no, my point was that the legacy system did miss that. So it's not like we're taking something and replacing it to something that's perfect and replacing it with something that's highly sort of porous. So yeah, I'm excited to see how we can collectively come together and look at these things a little bit more holistically, sometimes a bit deeper as well.
Well, if I can say one more thing on this, like this really comes back to that psychology piece, right? Where if you haven't identified what your strategy is, you haven't identified your own psychology and does some self-evaluation, it's really easy to kind of fall for these traps. And like in my case, it was me saying, oh, like I have this longer term time horizon for when I want to be completely financially independent and retire. But here's this big opportunity where I'm seeing all this upside where if I double down, maybe I can make this happen earlier. And so I think that it's really easy to fall into these psychological traps. And this is why you need to have a plan from the start and stick to it. I'm sure everyone here has that story of a mistake, whether it's a short that wasn't working and you've said, okay, well, no. If I just keep going here, like that stop loss, I don't need to worry about it because this is going to work in the end. I have the inside information. I have the knowledge here. Or an early stage investment where you didn't cut bait early enough, or you invested because you're excited about it, but you ignored due diligence or fundamentals. Like these are expensive mistakes to learn, and particularly as a retail investor who doesn't have access to large amounts of capital, it's very crucial that you protect that capital, particularly in a bear market like right now. So I would just say,
yeah, go ahead.
That's pretty much it. So.
No, I was going to say that the fear and greed index is real, and I think to kind of look at that and make that work for you rather than against you is really important. Yeah, but thanks, Connor. Thanks, Connor. That was great. I've got a couple more, just last two speakers. It's K Dot and then Jin Kang. So just when you're ready, go for it. And thanks very much for everyone else who's spoken up until now. So K Dot, go ahead.
Hey, firstly, thanks for having me up here. Just want to make sure you can hear me, right?
5 on 5, yeah, great.
Perfect, man. So just to kind of pitch in here, maybe give my thoughts. I'll be honest, I think day trading or trading in general, I don't know if that's a great start. I know a lot of people start that way when they get into crypto. I personally think it's maybe not a great starting point, just because 98%, maybe even more, are not profitable traders. And also with the access to future trading and being able to leverage 100x, 1000x, whatever it goes up to, it really just allows these people, most of them, just to lose their full balance. I think the way forward, especially the way things are going, talking about seed rounds and investing into startups or Web3 startups, it's becoming and has become more accessible to retail investors. Yes, going back a few years, up until however long, it hasn't been that accessible, or it hasn't been known to where to look for these deals or how to get into these certain groups. But I feel like, you take less of a risk and you have more time to actually do your DD on certain startups in terms of their team and everything else, if you're provided that information from whatever group that you're in. And going that route to invest into startups and having access and exposure gives you higher and more upside into day trading. I think there's a lot of emotion attached to day trading, and a lot of I think a gentleman came up here earlier and was saying about people exit positions too early. And a lot of people, from people that I know of, they just chase losses too much. And if you're able to, whatever amount of capital that you have, and you can diversify that into different startups, let's say 10, at least 3 out of them may do well, and they'll make up for most of the other ones that have lost. And the great thing about crypto is it's tokenized, right? So you're liquid at the moment that the vesting starts. Whereas if you're in traditional markets, in equity and stuff, and you invest in startups, it's a bit different. Again, you can invest in startups in the Web2 via like angel list, so that's accessible as well. So I think that the way the industry is going, Web3 is great, especially for retail as well. It's becoming more accessible for everyone to pull together and get into some really, really great, promising projects. My point of view is, I think day trading really destroys a lot of people. I think it's like, I know there's some traders out there that are really successful, but I really do think it becomes a gambling thing, and 9 out of 10 people, they just become really attached emotionally, and then they just chase losses, and then that's where they leave crypto, and we don't have that adoption. But again, saying that is hard because Binance or any centralized exchange are the biggest onboarders to this space. So, and a lot of those, they don't know about DeFi, they don't know about a MetaMask. So yeah, I think that's something that we need to work on, is how do we onboard these people, but straight into the DeFi space, rather than onto a centralized exchange and then over to DeFi.
Thanks for that, K-Dot. It's actually fascinating because I can pick up from what you're saying. You don't actually know that much about Commonwealth, but it's brilliant because it means that the audience listening isn't being kind of manufactured this discussion. So K-Dot's on the panel, and he's just saying that he feels that day trading is a good way to get wrecked, and basically kind of a much better way is to kind of try to find opportunities to invest into projects that you think have a value to add, and try to get in early. And that resonates a lot with what Connor was saying earlier as well. And I'm not sure that Connor knows too much about Commonwealth either, because to be honest, Commonwealth is aiming to solve those problems. And you mentioned Angel List. Well, I think Commonwealth is going to do it a lot more kind of accessibly than Angel List, in terms of just a Web2 platform that's going to, well, it's a full Web3 protocol, but the app that we're developing is going to allow people to tap on investment opportunities, which are funds, and they are going to be loaded with early stage seed venture deals, opportunities, and those are going to be put forward by a council. It's all going to be done on the protocol. And yeah, I mean, that's what Commonwealth is aiming to do. So I'm loving that that we went full circle, and that you were able to kind of set the stage somewhat for that. It's not a plug. It's just that it's just nice to feel that we are going in the right direction somewhat. And like you said, Binance and the central exchanges are the biggest entry doors for most people into crypto. And I think that is one of the things that does need to change if people are going to be able to access this type of venture or this opportunity that you just talked about, which is going to keep them hopefully a lot more sane than seeing like their positions get liquidated on a central exchange, which let's face it, I think most of us have had that experience, and it's brutal. So this is a much more different way to engage and get exposure to Web3. Sorry, one last speaker, Jim Kang. Thanks for being so patient, man. Come on in.
Yeah, thanks. I mean, everyone had a good point. I mean, just one last point. I've been running the largest investment DAO in the ecosystem called GCR Global Coin Research, and our whole idea is to democratize investing for individuals. And I think the biggest barrier to entry for a lot of individuals is just deal access, right? So our platform is to really enable people to come on and source deals, participate in the deals, rather than just like investing, just like a traditional syndicate model that you see in platforms like AngelList. And I think, our idea is to like let anyone who didn't go through, Ivy League consulting banking to think that's the only thing you need to become a successful investor in early stage investing. So we want to allow people to learn from each other, diligence together, and understand the process is quite simple if you can get access to awesome founders and teams and projects that are building in the space. And we want to see how that goes. And unfortunately, in the US, the rule is that you got to be an accredited investor to participate in those. But hopefully, the law is going to be, much more flexible after the recent proposal was passed in the House and now it's going to Senate. So let's hope the rule gets a little bit lenient for individuals in the U.S. So that's all I have to say. Thanks for having me on the platform today.
Awesome, Jin. Thanks very much, man. And listen, we should get in touch. It sounds like what you're doing and what Commonwealth is doing might have some synergies. And nice to have a great what's a validation, I suppose, from people who are seeing seeing things in the same way. It's been amazing. I hope everyone on the panel is able to sort of feel good about what they've shared, and if there's anything else that they feel that's burning, feel free to pitch in. Otherwise, I'm gonna ask Tony Kelly to come in and just. Tony's the CEO and CTO of Commonwealth, and he's been doing this for about 14 months now. So on the technical side of things, he is the right guy to answer some of the questions which came earlier, which were around like, how's things going to work? We're talking a lot about education. We're talking about how are we going to, yes, educate, but give us a little bit more in terms of what that means. What does it mean to educate, and what is the early thinking around Commonwealth? I think specifically around the education piece, Tony, how is Commonwealth going to handle that?
Yeah, no, it's a great point, and to your point, Tim, it was mentioned a couple of times today, and I was very heartened to see some of the speakers mention it, because it's often one of the kind of sticks the SEC uses, right? Better keeping the dumb retail investors out because they're not educated and they don't have the means. They'll only hurt themselves. But then you see all the enforcement and kind of banning piece, and you don't see a lot on the education side. So we think with blockchain and Web3, we have that opportunity now to do two things hand in hand. Provide the access and infrastructure on one side, but provide the insight and education on the other, both from either an experienced counsel who are surfacing these deals for funds which have a solid investment thesis, which have been voted on by the community. We then want to provide those kind of workshop opportunities and share the due diligence that those projects and funds have gone through. And in addition, try and scale that due diligence through the community. We believe there's that kind of missing piece of engagement almost is kind of lacking in Web3. And what we've tried to do is bring community and education in right alongside at the heart of the application and protocol, just as much as the actual transactional piece would be for investments. So, apart from a kind of a very integrated kind of learn to earn type reward scheme, we don't just want to tackle the usual kind of Web3 tropes for newbies of, how to handle a wallet, or even what is a non-custodial wallet. Sure, we'd have to do that piece too, but we also believe the actual world of investment and fund-based investment is also complicated and riddled with complexity, and that needs to be unpacked for people as well, especially retail investors, if we're going to help them become empowered and educated investors over time. So we have a multi-year vision. We're not going to get everything right straight away, but I think between what we want to do with scaling and structuring and standardizing due diligence and the insight into projects that we are proposing to the community to fund, is that a kind of much richer understanding and user scaffolding that I think kind of retail investors need. We kind of see ourselves as wanting to become ultimately the Robin Hood of early stage Web3 investment, and we've a long way to go and a lot of problems to solve, as your audience mentioned today.
Thanks, Tony. That's brilliant. If there's anybody on the panel who wants to unmute themselves and add anything, please do. Otherwise, I mean, we're sort of 40 minutes or so over the hour that we planned for, but it's been really rich. So I've thoroughly enjoyed it. And I would encourage anybody here to share the spaces out, because if we're talking about education, then we're talking about sharing information as well, because we can't educate without, kind of giving each other the benefits of the insights that we have. So this is where it starts. Please share the message out there, and I'm not seeing anybody unmute themselves. So I'm gonna take the opportunity to say a huge thank you. Oh, Michael, come in there.
Yeah, I just wanted to just quickly step in and say, like, don't ignore the power of positive peer pressure, right? So peer pressure can work in a lot of negative ways, but if you surround yourself with other individuals who have the same goals, who are working towards the same disciplines, who have the same sort of financial objectives, you're going to become the average of the people in that group. So there's a lot of value in finding the right community, finding the right sort of group to kind of associate yourself with, and that can really speed up your learning curve, especially if it's the right type of system for you.
Totally love that, Michael. I suppose on that note, what our ambition is to create an infrastructure where that that sort of positive peer pressure effect can take hold, and that the average or the common denominator is a very positive one in terms of I said earlier, success leaves a trail, and it's essentially that you're talking about. And I think providing an infrastructure that allows all of that to link together is incredibly powerful, and I think can bring huge promise. So love that. Thanks, Michael. That was a great way for us to end the show. That's the end of the All Street Beat. So thanks everybody for joining us today, and please share this out to anybody who you think might be interested. And we'll see you all again next week for All Street Beat, same time, same place. Thanks everybody, and have a great day.